Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. Multiple symbols that Uncle Charles covers have backtested some critical resistant levels. You can see the SPY here. I got fib level from the July high down to August low. Back tested the 78.6 fib level, found selling pressure. QQQ, I have fib level from July high down to August low as well. Back tested also that 78.6 fib level and had a hot stove rejection. Dow Jones, we already talked about how it back tested my orange trend line and it did not recapture. IWM also backtested, almost backtested the 61.8 fib level. I also have fib level from July high down to August low. Almost backtested the 61.8 fib level. Tesla, it backtested the 240.7 level as a support. So it backtested a critical level as well, but it tested it as a support. I think you guys get the picture here. But let's start off. What do I want to start off? This is a 2-day chart. Holy moly, do you guys see what I see on this 2-day chart? I mean, if we go to a daily chart, which is what I usually look at, you don't see nothing. You just see a bunch of chop and slow melt up that's looking kind of weak right now. But you go to that 2-day chart. Look at that big green candle followed by a doji. What does that usually look like? It usually look like a reversal pattern forming. What is it called? An evening star pattern? Sometimes I forget because there's so many darn patterns. Potential evening star pattern. So remember, this is a 2-day chart. So it could, obviously going to take more time to play out. 2 days, maybe 3 days. But that's just something worth noting. I believe that we have a potential evening star. Is it evening star? It has to be an evening star. It ain't a morning rising pattern. So many patterns, but what I'm trying to get at, this is a potential bearish pattern forming, and as I always say, we gotta let the price action confirm using the levels and the setups that I am going to give you in this video. Make sure you guys stay tuned. The point is to give you trade ideas, prepare for the week, unbiasedly like a sheep. But before I do that, there's something I want to talk to you guys about, and it's, of course, seasonality. For the past few months, I've been tracking seasonality, and I've been updating it to you guys from time to time, what's going on. And as you guys can see, I'll point at the green arrow, what tracked, and I'll write it tracked. I'll write if it didn't track, I'll write did not track. As you guys see, this so far this year, seasonality has been tracking. It's been more right than wrong, and for me, I'm looking for things, strategies or whatever, that gives me an edge. There is no 100% in the market. There's no 100% in the market. Anyone who tells you it is or trying to get that 100%, you're going to set yourself up for failure. But when I look at things, I don't expect it to be right all the time, but I do want it to be right more than it's wrong. That's where the edge comes in. And if we follow seasonality, we can see the edge in following this. But I'm saying we're tracking this. We don't trade based off of this. We follow this. And as far as the last week of August heading into September, I wrote there, I point the green arrow that it tracked. Okay. Remember when SPY was up here, I was telling people, guys, we're heading to bearish seasonality. All right. Anyone who did not listen to the price action, not Uncle Charles, screw Uncle Charles, I'm talking about the price action. Anyone who didn't listen to the price action, and tried to go long up here got screwed. And then when we was down here, heading into mid to late August, I told everyone, guys, we're heading to a bullish seasonality. The last week of August is usually a bullish one. And SPY, where'd it go? As low as what, 435? In the last week of August, it went as low as 435 and went as high as 453.68. Holy moly. That's more than an $18 move. So I wrote that. It tracked. Okay, so now we are entering a new phase in seasonality. I wrote the yellow line right here, the yellow arrow. We are here now. And as you guys can see, in the last day of August, heading into the first week of September, it's supposed to be choppy. So far, if we look at the daily chart, we'll go to the daily chart. So far, it's tracking a little bit. Or we go down to the 30-minute chart. You can see it even more. How with seasonality said the last days of August, heading into the first week of September, it's going to be choppy. You guys see on a 30-minute chart, that's exactly what's happening so far. It's been choppy. Okay? So, oh, that was Dark Pool. So, this is based on the average. Okay? The average movement. And we have to understand that. Based on the average of the last 20 years, it suggested that SPY would pop to the upside on the last week of August. But look where it ended. It's supposed to go as high as July. So, and did we go as high as July? No, we did not. July is all the way up here around 459. We did not make it up to the July high. So, even though it followed the tendency of seasonality, this was a below average. Follow through, if you will. Okay, so this will affect it next year. Okay, so when we look at seasonality next year, this will be a little altered. Okay, because the last 20 years. So we had a below average rally. Okay, let's see if it continue to follow through, and if it does, unfortunately, we may get a choppy week this week, heading into the mid-September, or maybe just before mid-September. Is going to be another rally. There could be another rally. And then, holy moly, we're going to give that all back around mid-September. I don't know what the catalyst is going to be, so definitely pay attention, guys. But something is going to usually something causes the market around mid-September to go into a big drop. Like all the gains we made in July, and I mean August and first half of September, we're supposed to give it all back based on the 20-year average. Okay, so we'll see how this plays out, but overall, don't be too surprised if this week we end up getting a bunch of chops. All right, now let's get back to the charts, because at the end of the day, the price action is the true shepherd. And as you guys can see, seasonality can be wrong. All right, it's been having a nice winning streak lately, so we gotta be careful that it could be the market makers could flip it on us, and we end up, it ends up being wrong. Okay, so let's get to the charts. Did we clear that 451.7 level? No, we did not. Remember, I have fib levels from all-time high down to October 2022 low. So for 478.98, that's all-time high, down to 348.11. 451.7 was the 78.6 fib level. Still have not cleared it. That's why in my last video I raised the question, could this be a lower high? All right, and it's not a prediction, it's just a question and something to watch out for, because the point of this video is to prepare. So what's the plan, Uncle Charters? Well, we had a back test of a critical resistance level, as mentioned in the beginning of the video. If this shows follow through, and if this ends up being a lower high, okay, we gotta see follow through and breakdowns of support levels. So for me, that is the 449 level. 449 is the 61.8 fib level, and now it aligns with my green trend line from March 13th low. Here, recaptured. May test it as support, but if it breaks down, that'll be a false breakout, and that's the price action screaming at you, screaming at us, telling us, hey, this was a lower high. Okay? So if you want to be bearish, you want to see that breakdown of 449 to target the lower levels. 446, 443, 439, and 437 are my targets to the downside, okay? That's the bear case. Bull case, just like before, it needs to clear 451.7. We had some intraday breakouts above it, But we had a strong rejection for my 453. What's that level? 453.7-ish level. That's a 78.6 fib level. Back tested as a resistance. No breakouts. No breakouts of critical resistant levels yet. Now, if it's going to chop like seasonality suggests, I still like to see 449 hold on any pullback. That would be great. 446 lowest maybe. But preferably, if you're bullish, you want to see it stay above 449 and break 451.7 and 453.7 to trigger more upside. We still have that gap. Well, I got 455 first, and then we have that gap at 456.4, 458. That was the previous pivot high from July 31st. And, of course, the July high at 459.4. All right? Possible chop this week. But if the market makers decide, nah, we're not going to chop, we're going to do what we want, fine. Don't argue with the price action. Follow the price action. Bulls in control above 451.7 and 453.7. Bears in control below 449. Look to react. All right? Look to react. Triple Q. Is this also a potential lower high? Okay? It tested that 78.6 fib level. Followed, and it was a strong rejection. Okay? That rejection led to like, what, a $4 drop intraday. That was a freaking beautiful move. But follow through, it needs to break down 375.6. Or just 375 to be more safer to put 373 and 371.3 in play first, and then 369 and 367.4 below that. Overall, I would be very bearish below 375. Okay? As long as above, could be consolidated, could be chopping for some higher moves. I have resistance at 378, 379.3. Can round it up to 0.5. 381. Above 381, we got the gap fill at 382.2. 384.4. And then I favor a test of the July high at 388. Okay? Bull case starts, really, if it can clear 381. All right? Bear case starts below 375. Let's try to keep it simple this week. Watch out for those chops. But above 381, bullish. Below 375, bearish AF. Anything in between could be consolidation as suggested by seasonality. Dow Jones, we have an inside daily candle setup. It usually don't come often, but when it does, I like to point it out. Mother candle's range is 351.2 down to 347.74. We need the break of that range. 351.2 down to 347.7. Add those levels to your charts. That is the chop range. Anything in between, look to scalp if you choose to trade it, but overall it's just chop and noise. A break of this range should give us a signal for the next direction. So obviously, below 347.7, we want to look to short with 346.5, 344, and 342.5 in play, possibly down to 340 as well. If we break out above 351.2, that's bullish. Look to long with 353 and 355 plus in play. IWM, if this is a lower high, and this divergence, because people are going to talk about the divergence. If it's going to play out, price action needs to confirm. I'd rather focus on the more important stuff, which is price action. And that would be a breakdown of 190 and 188. All right? 190 breakdown, look to short. 188 breakdown, look to short. Target 185.6. If that breakdown, look to short. 181.6 would be in play. If it can stay above 190 and clear 192.2, don't argue with the price action. Oh, but the divergence, the RSI. Don't argue with the price action. If 192.2 clears, 195, 196.2, and 198 plus are in play. Tesla back tested Almost back tested that 240.7 level. That's the yellow trend line, lower high pivot low here. Recaptured it recently, trying to confirm the recapture. So if it can stay above 240.7, it's still bullish, but it'll need to show some follow through by clearing some resistant levels, starting with 245.5, 247, and 250, and 253 above that. Above 253, I would favor we go back to the 270-ish. But that's a big statement. We'll play level to level though. Above 253 puts 257, 259, 261, and 263 in play. All right, Bears take back control when 240.7 failed. If 240.7 failed, this is a lower high. Look to short. It's gonna get very nasty. Probably down to 235, 230. But I wouldn't be surprised if we drop back to 227, maybe even lower, down to 212. Who knows? Apple, just remember, look to react, okay? Below 240.7, look to short. If it's above 240.7, we clear resistance, look to long. Okay, keep it simple, please. Oh, Apple. This is interesting, right? It's looking kind of weak here, a little doji up the top, right? Let me look at the 2-day moving chart. Okay, it don't look as bad on the 2-day moving chart, but overall plan would still be the same because we broke out that 180 level. Okay, we broke out the 180 level. If we break down 180, this was a false breakout. Look to short with 185, 182, 180.7, and 178 back in play. If we stay above 180, the rally continues with 191, 192.6, 194, and 196 plus back in play, okay? NVDA, it back tested a support level here. Let me move the blue one so you can see the one I'm talking about. Yep, this back tested this fib level right here. I got fib level from July high down to August low as well. Back tested it for 80.8. If that is lost, you got a false breakout setup. Very bearish. If that is lost, look to short. We're going to drop pretty low. But if it stays above 480.8 and it managed to clear a resistance like 484, look to long. Don't worry about missing some moves because NVDA moves. The stock moves, man. If 184 clears, that's a sign that this back test was legit and we could see more upside 488. 490 or higher. Microsoft still can't get, look, it's bouncing off that 327 level. There's clearly buying pressure there. It's a fib level. Can't get bearish unless that fails. Below 327, look to short. We could head back down lower. All right. But if it stays above 327, and we could trust the bounce if it clears the resistance, preferably the 330 level and the 332 level. If those levels clears, we're going up back higher, up to 334, 335.5. Maybe retest this orange trend line at 340.5. Amazon didn't quite, it got, as high as 139.96. Didn't give us the breakout of 139. It gapped up and just broke down 139. That was our trigger to go short. Gotta wait for the setups. And the setup was that it just broke down 139 at open and then just, went all the way down to 136.8. I have support at 136.6 and of course 134. If this, if the selling that we had last week continues, those support must fail. Look to short if they do with 132.6 in play and lower, down to 130 possibly. But overall, this could be a back test of support, and if that's the case, I'll only trust it if 139 recaptures or finally clears. If that does, look to long. We want to see it break out intraday. Even if it gaps up above 139, you want to see it bounce off 139 and clear the next resistance at 140.6 and 142. All right, Google still managed to stay above 136.4, 1.5 Fibonacci extension level. Can't get bearish or short-term bearish unless that fails. So 136.4 failed, 134.8 incoming, and 132.8 lower. If 132.8 fail, we're going to definitely head down to 129.5. We need that breakdown of support. Overall, 138 is resistant. If bulls want more high, they'll have to clear 138 to get to 140.4 or higher. All right. Meta did not give us the breakout of that trend line, the white trend line. Did it give us a breakout? Hold on one sec. It did close above it, but it's a pretty pathetic breakout, which is why I barely want to consider it a breakout. But it did close above the white trend line. White trend line support is at 295. If 295 fails, guys, that's a false breakout. Look to short, and we'll probably head down to lower. Of course, I have 293 in play first, 291, maybe down to 288.5. But if it stays above 295, trust the bounce. If it can clear resistance, starting with 299.5, 302, and possibly you can go test 309 up above. Netflix, it broke out 437.5. In my last video, I mentioned to you guys you want to look to long above 437.5 and managed to get as high as 445.5. Amazing. So if 445.5 clears next week, guys, we're going to head up a lot higher, up to the 453 or higher than that. All right. 453. What else I got? 453, 456.5. It's going to be a nice move to the upside if we can clear 445.5. Now, if we break back below, like 437.5, like I always say, that's a false breakout. Look to short. And that will put 432, 426.5, and possibly down to 419 back in play. AMD is trying to bounce here, trying to go for this yellow trend line. This is a new yellow trend line that I just added. Some of you have probably been have this, but I just added it from June high, and it got a touch here on August 7th. All right, can we get that third touch? If it does, it'll be at 111. Above 111 puts AMC in breakout mode. Above 111, I would be bull bias with 112.2, 116.2, and possibly up to 120 in play. Now, if it tests 111, I would trust the rejection if we break down support. If it doesn't test 111, that's fine too, because if it breaks down support, that's still bearish. 109 and 107 are support, as you guys know. And if it breaks down 105, 103.5, 101.5, and 99.5, all in play. SPOT managed to clear that 50% fib level at 155.6. Watch out for a false breakout. Okay, if it's a false breakout, it has a breakdown 155.6. To be bearish, trigger to go short to put 149.8, 144.5, and 141.6 in play. This market is pretty. Spotify is kind of volatile. It's a nice stock, so just keep that in mind. If it breaks down 155.6, that's a false breakout. We could get a nice move to the downside. Now, if it stays above and it breaks out 158.5, definitely look to long. 160, 161.8, and gap fill at 163.7 would be in play. All right, guys. So that's all the stock I have for you guys today in the trade ideas, covering both the bear case and the bull case. We're going to trade this unbiasedly. Whatever the price action goes, we don't argue with it. We're just going to trade it because why? Our P&L is what's most important, not our ego. Now, before I end this, I want to do the dark pool order. And we had 1.2 billion in premium at that 451 level. And of course, that was actually around where SPY closed on Friday at 451.19 is where SPY closed on Friday. And we had a good amount of premium coming in from the institution at 451.14. So I don't know if they provided liquidity for the end of day, but usually when I see this, it's usually a gap, either a gap up or a gap down. Overall, above 451, a gap up above, that would be obviously bullish. We'll see what happens though, but obviously above 451 would be bullish. Below it would be bearish. All right, guys. So thank you guys so much for watching. I hope this video helped you guys prepare for the week. And if you want more content from Uncle Charters, please consider joining my Discord, aka The Flock, aka The Sheep's Den. Peace.